Kenya's insurance landscape has been one that's been dynamic, and today I'm joined by Abel Munda, who's the managing director for Liberty Life. And just perhaps, Abel, just to start us off, you've been in the game, or rather the company's been in the game for 50 years. You started off as Alico, moved on to CFC. Now you're Liberty Life Kenya. Why are there so many changes in terms of name and brand and association in Kenya?
Thank you, Michael, for that question. Actually, I won't say that there are many changes. We've only had, the three changes. First, from Alico to CFC Life, then from CFC Life to Liberty Life now. Yeah. And the reason why we did the latest change, obviously, is just to align ourselves to the Liberty brand, which is a multinational organization operating in 15 countries in Africa, mainly in Africa. And we feel that with that alignment, we can enhance the customer value proposition and even employee value proposition in a number of ways. Yeah. I mean, this company has grown from strength to strength. We started off 50 years ago, so this is actually our 50th anniversary. And we've now, we are a company of 22 billion in assets and still growing strong. Yeah. And so to align ourselves to a multinational brand will only work to our favor, as we seek to grow our customer base and by enhancing the customer value proposition. Yeah.
There's a lot of what Liberty Holdings does a lot in terms of life insurance, asset management, and such things. Are you looking to borrow some of the products that they do offer and tailor them for the Kenyan market?
Yes, that's one of the things that we will do, and that is one of the advantages of being part of a multinational group. Yeah. Essentially, Liberty, I mean, having learned from all these countries where they operate, are able to come up with products that are fairly superior, having drawing from experiences all over the continent. But what is important is, as we bring these products to the Kenyan market, there must be products that are demanded by the Kenyan people. And the way we ensure this is to carry out regular research, regular surveys, to just try and find out what do Kenyans want, so that we are able to tweak and attune these products to the demands of Kenyans. And we've done a number of this. By changing this name, by the way, this is not a new relationship. We've been working with Liberty for the last 5 years or so, yeah. And because we've worked together, we've learned each other quite well. And this is all for the benefit of the customer. So as we bring these products online to sell to the customers, we must make sure that they speak to the demand of the local population. Yeah. But
now starting with, I mentioned that Kenya's insurance market looks like it's very dynamic at the moment. We recently saw the Prudential from the UK actually come and set up. What's this appetite for insurance in Kenya vis-a-vis the low penetration rate that we are seeing? Why is that the dynamism, and why does that look like there's interest in Kenya?
Yes, Mike, the penetration for life is indeed very low. I mean, as at 2013, we were talking about 1.2, if you talk just about life by itself. Total, we were just about 3.5. So when you look at it by world standards, actually we are low. Yeah. And therein lies the opportunity, actually. I think it is low partly because of awareness, lack of awareness, and partly because maybe as an industry we've not come up with suitable products that the public demands. Yeah. And so that is a challenge for us, and we look at it as an opportunity, even as an industry. Yeah. We need to innovate, we need to take products to Kenyans, we need to create the necessary awareness. And the best thing for me is that as the social structures, keep changing, and as we continue to urbanize, I mean, it is reckoned that right now, about 22% of Kenyans live in urban areas, and by the year 2020, this is reckoned to increase to 30%. So as we continue to urbanize, the social structures change quite a bit, and individualism sets in, whether we like it or not. And with this, the demand for insurance products, wealth management products will tend to increase. And I think this is what the multinational players are also seeing. Yeah. So we have the recent entry by some, two multinationals, and they're seeing opportunities. And I think as people are becoming obviously more educated, and people are looking to saving for their retirement and buying products that will help with the education of their children, by the way, which Liberty Life has very, very, very good products in that range. We'll continue to see the landscape changing, and we'll continue to see probably a lot more investors coming in. Yeah. And this is a good thing, because then they increase the depth of insurance products and market.
So is it a question of whoever gets it right will be on course for better growth in this market in terms of insurance? If you get that link between what customers want and what you're able to offer them?
Yeah, it is whoever gets it right. But I think to get it right, there are a number of factors to consider. And first and foremost, for insurance, it is the distribution channel. So how do you reach the people?
Yeah.
Remember, insurance...
I saw one place where you advocated for bank assurance instead of using the traditional channels of agents. Is that still the way to go?
Yeah, and bank assurance is just one of it.
Yeah.
Okay, there are a number of ways that we can reach the people. So the traditional agency channel has its role to play and will continue to be here with us. But as the products become simpler and simpler and easier to sell, maybe the one-on-one sales that the agents play a big role in will become, probably less and less relevant, except for the traditional products. But other channels such as bank assurance are critical. And we are looking at, the affinities which you sort of partner with aggregators to be able to reach a multitude of people.
En masse.
Yeah, exactly, en masse. And this is the key. This is what will change that penetration.
From 3.5% to almost 12.
Well, probably 12. I mean, we have advanced markets such as South Africa just here where life penetration is about 15%.
Yeah.
World average, particularly in the developed world, about 8%. There is nothing that stops us from reaching those percentages.
All right. Yeah. Thank you very much. That has been Abel Munda, Managing Director for Liberty Life Kenya, just telling us about Kenya's landscape for insurance and where Liberty Life hopes to see itself in the near future.